All right, so without wasting our time, we'll be starting today's topic in taxation. We call this personal income tax. I'm sure you remember that we had done something which is very much related to this a couple of weeks back, and that is payee. Who remembered we had that topic, payee, and what can you share about it? Bring us to speed on what you learned when we considered pay as you earn. We can share what you learned in those class when we had it. I need opinion of people. You can either use the chat box or you use you enable your mic.
Good evening, sir.
Yeah, good evening.
Okay, so at that time we learned about the statutory period for remittance of pay. That was 10 days after the date of payment or end of the month.
Okay. After that, that was not the only thing. Who else want to share what you learned when we considered payee as a topic? Yeah, Francis, you have the floor.
Yeah, good evening, sir.
Yeah, good evening.
Yeah, on that date, we equally learned how to compute the payee and the statutory deductions to be made from what constitutes the payroll, the statutory deductions, and how to compute the payee.
Okay, thank you very much. Who else had something to say? What has been contributed is well noted, but we considered much more than that. Who else? Okay, the last time we considered a topic on payee, we did emphasize that payee means pay as you earn. And it is a form of tax that is deductible by the employer who has in its employment employees working for the company or with the company, right, in a full-time or a non-core capacity. And the law provides, the payee regulation provides that every employer who has employee in its employment is expected to register as a tax agent for the deduction of payee and its remittance, as well as every other related taxes. And by that, we mean withholding taxes, capital gain taxes, stamp duty, where they're actually due to be collected by the states. We had in our earlier classes also considered various taxing authority, the prominent of which were the Federal Inland Revenue Service, which collects federally collectible taxes. And we also considered state internal revenue services, who are liable to collecting state collectible taxes. I remember that in one of our previous classes, we did identify a number of taxes with respect to payee that were previously collectible by the FIRS, but with effect from 2020, when Abuja FCT IRS was introduced, and those taxes ceased to be collectible by the FIRS, but by the FCT IRS. So prior to the introduction of the FCT IRS, every resident of Abuja, those working in military capacity, the armed forces, police and the armed forces, are expected to remitting their payee to the FIRS. But with effect from the introduction of the FCT IRS, the only form of payee that the FIRS collects is that of the those in the police and armed forces, as well as those individuals that earn income from Nigeria, but not resident in Nigeria, right? The position of the law is very clear. And we did emphasize that payee, pay as you earn, is almost the same thing with the personal income tax. The approaches to calculating this tax is the same. The enabling act that enforce the collectibility of these taxes is the same. That is a Personal Income Tax Act. The method of estimating it, the reliefs and deductibles that are accruable on these taxes is also the same, right? That being said, what then is the contextual difference between payee and the personal income tax? That's what we want to look at today. We'll be looking at this in a much more broader form, right? But in summary, it is important to emphasize that while payee is accruable to individuals in a paid employment, what then happens to those high net worth individuals or those who are into their own private business, the self-employed? The form of taxes they pay is then called the personal income tax, right? This set of individuals most definitely don't earn income on monthly basis. They will only earn the income when the business actually produces one. So because of that, they are not subject to payee, which is a form of income tax payable on a monthly basis, right? But the personal income tax, even though it is calculated in the same way with the personal income tax, even though it is calculated the same way with the pay as you earn, it is only payable once in a year, right? Another very important difference between them is for everyone that is subject to income tax on payee system, the employer is expected to file income tax returns at the end of the year. The statutory timeline for filing that tax returns is a period and 30 days or 31st day, not later than 30 days of the following year. That is the first month of the following year. So the tax returns for 2021, say for example, is expected to have been filed in the month of January. And the deadline for filing that should not be later than the 31st day of January. That being said, how then would anyone subjectable to tax under PIT will be expected to file in the returns? They are expected to file in their tax returns within the 90 days of the year following the month, the year when the income was actually presumed to have been earned. So in the same context, the income that has been earned by a self-employed individual in 2021, the returns of that is expected to be filed with the relevant tax authority not later than the 30th day of the month of March, which is technically the 90 days after the year end when the income was earned. So these are some of the very salient facts that we need to know as unique differences between payee and the PIT. Now, putting this into perspective today, we want to talk much more about this. We'll be looking at personal income taxes accruable on self-employed individual. How does this apply to expatriate individuals? How does this apply to high net worth individuals? How does this apply to a situation where someone is acting in a professional capacity, not in a regular full-time employment to a particular company, right? What are the tax arrangements around that? What form of taxes will be paid? And how will the expected tax be determined? In instances whereby you have somebody who has a foreign income, which is the taxing authority that has the primary taxing right? These are some of the things we'll be looking at today. So I would just enjoy you to sit back, relax, take note of areas that you might need further clarification, pen them down, and when it's time for question and answers, you can raise your concern. So we'll be looking at the following outline in this topic. Contract of employment, what does that mean? And contract for employment. What is the difference between them? What form of taxes are accruable on this form of contracts? And how will this be calculated? What is the statutory timeline for the estimate of this form of taxes? And all of that will be considered. Types of employment will have, there are instances whereby the employer of a particular employee is in Nigeria and the service to that employment is rendered within the country. So we call that a Nigerian employment. Under which instance do we have a foreign employment? We'll look at that as we go on today. What actually makes a foreign employment? How is a foreign employment taxable? Who has the primary taxing right where the income is being earned from a different country while the beneficiary of this income actually resides in a different country. We look at that. We also consider differences between employment, vocation, and profession. Then a itinerant worker, what does it mean? Are they taxed? Benefit in kind, what does this actually mean within the context of contract of employment? Does this really apply to contract for employment? Where it does, how is this tax? How does this impact the tax estimates, whether due as PIT or due as PE? Then we'll be looking at determination of residency. There are instances whereby a taxpayer resident in Nigeria, but has a place of abode in more than one state. And remember that we had earlier said that the primary company that will have the taxing rights on an employment income of an individual is to be determined by the state where that employee or the taxpayer is actually resident, right? We'll be looking at that. Then what is the meaning of income on its own? We'll be looking at that. And what is the difference between earned income and unearned income? But before I start, let me seek the public opinion or your view on the differences between contract of employment and contract for employment. Do you think they are the same? If they are, why are they? If they are not, what are the differences? Over to you. Who wants to share his or her view on what a contract of employment is and what a contract for employment is? Do you think they're actually the same? Sahib, what's your view? There is a noise from your background. Mute your mic. Maybe when you are much, when you are in a much more noiseless state, or you use the chat box. Akonde, what's your view? Elizabeth. Esther, Francis, Khadija, Jumoke, Rafiu, what are your views to the question? Esther says no idea. Okay, what about the others? Okay, because of time, these are very important terminologies we must know as accountants and a tax person, right? Because it is your understanding of this will actually inform how they will be treated for tax purposes. They are not the same. When you say contract for employment, these are people that render services to the company or to a particular company in their professional capacity. They are not in any way, the skill set required for the delivery of the services is independently acquired. The mode of operandi of delivering the service is actually independently put forward. Whoever that actually engaged them to render this service trust and hope in their competency, professional competency to be able to deliver on this. And what the service beneficiary only expects is that use your professional competence to deliver on the job, and let's see whether it meets the expectation. A typical example of that is when you engage an auditor to actually conduct a statutory audit on your financials. You that you engage the auditor will not dictate to the auditor how the job is to be done, right? If you engage, say for example, a carpenter to do some carpentry work for you, you definitely will just give a specification. This is what I'm expecting. But how it's to be done, the mode of operation for the delivery is to be self-initiated by the professional, right? Every form of contracts in this mode of operandi, wherein the contractee will not or could not delegate or determine how the work is to be done, mode of operations or delivery of the job, but only expects that the contractor will actually use his own professional initiative in determining the best way to actually deliver on the job. Any form of contract in that manner is said to be a contract for employment. So when you engage the service of a debt liquidator, of a debt collector, it is a contract for service. If you engage the service of any professional, carpenter, electricians, or whatever, even external auditors, it is a form of contract for employment. Then what is a contract of employment? Contract of employment are the regular paid employment in full-time or remote form of delivery. But the unique differences is that the employer will most definitely specify the mode of operation for delivery of this service. It will specify the time you are to come in and the time you are to leave, or you may likely leave. It will determine, it will definitely provide the resources for the delivery of the job. It will probably, in most cases, also provide you with the standard operation procedures on how the job is to be delivered. This form of services are called contract of employment. So for many of you that in their regular 9 to 5, the form of contract you have is a contract of employment. While those who are acting in consultancy, in advisory capacity to their various clientele are also still in employment with the client, but it is a form of contract for employment. I believe you understand the differences between contract of employment and contract for employment. Any question on that before we go on? Any question? Any question? Do I assume that is well understood so that I can go on to the next concept? Okay, so the explanation of that is what I've put forward here. Contract of employment is an agreement sometimes in written form. It can be written, it can be expressed, it can be implied, it can be oral, whereby a person which is the employee, agrees to provide services or render job to another person employer in return for payment of wages or salaries. The contract of employment can be terminated by either the employer or the employee based on the terms of the contract. But on the other hand, contract for employment is an agreement which can be in a written form or expressed or implied, whereby a person known as an independent contractor or a self-employed individual is engaged to carry out assignments or projects for the company in return for a fee, right? So the question then is, how are these two categories of employment subject to tax? Of course, the position of the law is clear. Whenever you earn an income in an individual capacity, it should be subject to tax. So what sort of tax do you pay on contract of employment? And what sort of contract do you pay on contract for employment? The sort of tax you pay on a contract of employment is what we call pay as you earn. As long as you are resident in Nigeria, you earn the income in Nigeria, the employer is also in Nigeria, that income is subject to tax in Nigeria. There are also other tweaks to this contract of employment, because there are instances where the employee might not even be resident in Nigeria. The scope of services and the mode of operations and everything about the service delivery might not even be rendered within Nigeria. But the costs of that particular that particular service is actually borne by a entity who has a fixed base in Nigeria. So how then will that be taxed? Who should have the primary taxing right? We will be discussing that as we go on. Then contract for employment, these are people, just like we have said, rendering their various services in their vocational capacity or in their professional capacity. How will this be taxed? This set of people are not subject to payee. Rather, before their fee is paid, the provider of that, the beneficiary of that service is expected to doing what we call withholding taxes, right? But these professionals that actually earns this income under the form of contract called contract for employment are the group set of people that most likely will be subject to tax on what we call PIT, pay as you earn, right? So withholding tax is not a form of tax on its own, but an advance payment of the PIT form of taxes. So please take note of that. In a contract for employment, there are no employer or employee relationship. And as such contracts can be terminated when services are rendered or jobs are done or completed. So take note of that. So the next one is having explained whether the contract is between Nigerian to Nigerian or Nigerian to a foreigner or amongst foreigner to a foreigner, but this service is rendered in Nigeria. There can either be contract of employment or contract for employment. Those are the two forms of contract we could likely have. But let's now look at the types of employment now. An employment can either be a Nigerian employment or a foreign employment. When do you say an employment is a Nigerian employment? A Nigerian employment is any employment which is not a foreign employment and which the duties of such employment are wholly or partly performed in Nigeria. So even this does not necessarily mean that the employees must be a Nigerian. No. What we are saying is that irrespective of the origin or citizenship of the employees, the moment the job is done in Nigeria, whether wholly or partly, and the cost is incurred by a company that is registered with the CAC, it is a Nigerian employment. So a foreigner, a Canadian, can still have a Nigerian employment. American can still have a Nigerian employment. Most of these, those people we call the expatriates, they are actually having what we call Nigerian employment. Then the next one is foreign employment. A foreign employment is any employment whose duties are wholly performed outside Nigeria, right? Majorly or materially, the form of services, it is to be done, where it's to be done is most definitely outside Nigeria. An individual who holds a foreign employment on the first day of January in any year of assessment shall be deemed to be resident and pay tax in the states of authority, in the state tax authority where the principal office of his or her employer is situated. So this is an area that you now need to pay attention to. The fact that somebody, most definitely a Nigerian, holds a foreign employment who is also not in Nigeria, but the company that actually delivers, to whom it delivers that service to is in Nigeria, that income is subjectable to tax in Nigeria. Somebody is raising his hand. Adeoye, I guess. Any question?
No, sir. No, sir.
It's an error, okay. So that is what you need to know as far as the Nigerian employment is concerned. So when you are rendering your service to either your employer or your clientele, you need to look at all of these terms of the contract and the location where the service delivery is to be done, who is expected to bearing the cost. All of these things has to be taken care of, well studied before you render or offer your various advices in terms of what is the tax law that will be applicable, how is the tax to be calculated, who is a relevant taxing authority that has the right to collecting such taxes. So before we go on, any question on that? Any question on that? If there is no question, just indicate yes on the chat box. I'm not getting any response from other persons. Okay. Okay. So next one is, what is a vocation and what is a profession? When you say a vocation, you are referring to a specified occupation or trade which a person is suited, trained, and qualified, which in returns might earn income. Income in vocation is distinct from income from employment. Example of income from vocation can be in the form of gains or profits, right? So I can be an accountant working in an employee capacity in a company, right? But I might still have certain vocational skills that I do outside my 9 to 5, right? Those are what we call vocation, right? And in subjecting vocation to returns from vocation to taxes, you don't look at the proceeds, because in rendering that form of services, certain costs will have been incurred. Say, for example, I engage a carpenter to making certain carpentry construction for me. And if the agreed sum is say 100,000 naira, the gain to that carpenter is not 100,000. It definitely will incur certain cost of the materials to rendering the service, right? So in that context, it is only gains or profits from vocation that will be subject to tax. Then the next one is profession. Professions are specialized occupations carried out by people with high ethical standards, requisite knowledge and skill. So what makes the difference in these two forms of activity, professional activity, is in terms of what level of training has been put in place in being able to deliver, has been acquired in being able to deliver that service. What is the extent of ethical standards that actually regulates or guides those who are in that form of occupation? So whether vocation or profession, it is still an occupation, but one requires a longer time for the training, ethical standards to be adhered to, requisite skills in delivering that service. While the other one, it's much more like training or skills acquired in an unstructured environment. So now in respect of profession, they are often regarded as professionals and are expected to carry out the work with due care and diligence. Example of professionals are lawyers, surveyors, engineers, chartered accountants, name them. This set of people actually pay taxes on the actual amount of income they have earned, right? That is very key. So take note of the difference between profession and vocation. Most definitely, or in some instances, some of these professionals may earn partly income and partly gains. So when they have partly income, partly gain, of course, both will be subject to tax in line with the relevant provisions of the appropriate tax laws. So please take into cognizance all of this. Then another form of worker, we've looked at who is a vocational service provider. We've looked at who is a professional service provider, who also is an itinerant worker. Let me ask the house, who is an itinerant worker? Hello, the class is so boring today. What happened?
Like a bricklayer who work from one state and you move from one state and work in the other state. Bricklayer will be a good example.
Exactly. Any form of service provider who is not stationed in a particular place in a particular state is regarded as an itinerant worker. So an itinerant worker is a worker exclusive of members of armed forces. You know, members of armed forces are also not stationed in a particular place, but they are not regarded as itinerant worker. They have that exception. Who has worked in more than one state in at least the last 3 months. This set of people do not have a permanent residence, state residency, right? But the best way, the provision of the tax law with respect to this set of people is that they are presumed to have been liable to taxes in the states where they spend at least 3 months, right? That is the case with itinerant worker. So any form of service provider who render service on the nature of their work, they could be in Lagos today, they could be in Edo tomorrow, they could be in Calabar the following, are said to be itinerant worker. So for this form of services, particularly as relating to contract of employment, there are certain benefits they earn in cash, and there are certain benefits they earn in kind, right? And the position of the tax law is actually very clear, particularly when you are trying to ascertain what constitutes a taxable income. So taxable income actually includes benefits you have in cash and benefits you have in kind. So we'll be looking at what constitutes a benefit in kind, which is simply called BIK, and how are they to be taxed. Sometimes when an individual works with certain entities, they may have official car, they may have official residency, they may have other certain benefits that are verily attributable, beneficial to them as long as they're working with that very company. And so what we call a benefit in kind is actually what is accruable to you by reason of your role and your staff position in that very organization, which is not generally available to every other non-staff person, right? Is said to be a benefit in kind. Most definitely, these are not usually payable in cash, right? The ones that are payable in cash are simply cash benefits. So benefit in kind are expenses incurred by the employer on behalf of the employee for the purpose of providing relevant social amenities to the employee. Benefit in kind are not only limited to the employer, but can be extended to spouse, children, and relatives of the employee. So sometimes you will see some organization that says that, oh, they pay the school fee of the children of their employee. It's a form of benefit in kind. It's not payable directly to them in cash. Rather, details of the children's school will be provided, and those school will be credited directly. They may also provide certain benefits to their spouse, whether the husband or the wife, as long as they have so-so person working with so-so organization, those benefits are there. In some very extreme cases, some of these benefits may also be extended to some relatives of the employee. So when any of these is ascertained, they are referred to as a benefit in kind. So how are these things taxed? It's a question to be answered by everyone. Benefit in kind is taxable income in the hands of the employee, and they include but not limited to furnished living accommodation, gardener, use of official car for private use, the provision of domestic staff, and name them. All these are benefits in kind. So the most important thing you need to bear in mind is that these benefits in kind are not free of taxes. They are actually taxable in the hands of the employee. So looking at how do we tax the benefit in kind, we have to look at them. There are no generic approach. Rather, we need to look at what actually meets the criteria or characteristics of benefit in kind. And we then identify what is the relevant provision of the tax law with respect to taxing this benefits. So let's look at some of the ones we have identified for the purpose of this class. Assets owned or acquired by the employer. When an asset is acquired by the employer in the employer's name, but the employee has the right to use or using that very asset for official and non-official purpose, these are said to be liable to tax at the rate of 5% of the actual cost of that asset. Say, for example, a company, let's assume that Khadija just got a job, and one of the benefits of that job is she will have access to an official car. So among every other terms or benefit that have been communicated to her payable in cash, assuming the value of the car is 4 million, in addition to all the other cash benefits she earns, 5% of that 4 million will be estimated and added to her income and subject to tax, because she's not using that in official capacity alone, right? But if it's an official car that is not expected to be used at all for private purpose, meaning you don't go home with it, then it doesn't qualify as a benefit in kind. So next one is, also note that in instances where the asset has a rateable value or a market value, so we definitely will not take the 5% of the cost of that very asset, but rather 5% of the rateable value of the asset. Where the employer actually, that is in the second one now, where the employer provides the employee with a rented apartment or a hired apartment, or even an apartment that is built and owned by the employer. How does that qualify as benefit in kind? The answer is yes, because as long as that particular official apartment is used not strictly for official purpose alone, it is termed a benefit in kind. So how will this be taxed? The rateable value of the apartment provided to the employee, either its cost or the market value, will be taken as an income in the hands of the employee and taxed appropriately. I believe this is well understood. Let's look at the third one, provisions of residential accommodation. I think I've explained that one alongside with the previous one. So the annual rateable value will be considered as a basis of ascertaining additional benefits to the employee. Right? But of course, there are some benefits, even though they can be likely to be benefit in kind, but they are actually tax exempt. What are those benefits? The following are not regarded as benefit in kind, right? And therefore do not form part of the employee taxable income. One is expenses incurred in connection with the provision of meal in any canteen for all the staff. So where you have, let's assume where you work, there is a provision of meal for every employee. Irrespective of the cost of that meal, it is seen as a benefit to the staff, but not as a benefit that should be subjectable to tax in the hands of the employee. So that is to be noted. Then expenses connected with the provision of uniform. So if the nature of your work warrants putting on a specified form of uniform, the cost of that to the employer is a benefit in the hands of the employee, but it is not taken as a benefit in kind to be subjectable to taxes. So take note of that. There are benefits in kind that are subjectable to tax. However, there are a couple of other benefits, not a benefit in kind, that is not subject to tax, right? Then the next one is expenses connected with employees' change of residency. So if it is for reasons of being able to be positioned for you to be able to do your work, let's say you're working in Lagos and a new branch has been opened in, say, Rivers State, and you are expected to relocate to Rivers State to be able to do or render your service to your employer. that very cost that is to be bared, or which the employer has provided for you, as for you to be able to move your families and your gadgets from Lagos to Port Harcourt, will not be seen as a benefit that is taxable. Right? So section 737 of Peter, as amended and with the collaboration of the provisions of the Finance Act 2020, provides that an employee earning a minimum wage of 30,000 and below, even though it's also a cash benefit, is seen as part of the benefit that should not be subject to tax. Please take note of that. Determination of residency. Maybe before we go into this, I want to confirm from everyone if there is any question. I don't know what happened today. The turnout is very low. Does it mean people had forgotten that there is class today? So thus far, we have looked at what contract for employment is, contract of employment is. We've also looked at what qualifies as, what are the various forms of employment. We've looked at a Nigerian employment. We look at a foreign employment. We've also looked at various forms of services to the beneficiaries, whether you are in service in the form of a vocational service provider, or you are in the form of service in the form of, you are in service in the form of professional capacity to the beneficiary. We've looked at that too. We've also been able to consider what are those things that qualifies as benefits, the ones that is taxable in the hands of the beneficiary and the ones that are not taxable in the hands of the beneficiary. So we're moving forward. We also looked at, we are now to look at determination of residency. This comes up as a point of concern where the employee actually has income in more than one state, right? The position of the law is very clear, right? That when you have residents, when you are residents in more than one state, how do you determine the primary state of your residency? Resident individuals, an individual is said to be resident if is domiciled in Nigeria. You have to be living in Nigeria, stay in Nigeria for a period or periods amounting to at least 183 days, and also serve as a diplomatic agent of Nigeria in a country other than Nigeria. So even though by reason of the nature of your service to the country, you are not physically present in Nigeria, we're talking about diplomats who work in various parts of the world, but in a diplomatic terms or condition, even though they are not physically in Nigeria, they are seen as being resident in Nigeria. So what are those instances where you have people who are not, who are interpreted as not being resident in Nigeria? An individual is said to be non-resident if it is not domiciled in Nigeria. So if you're not living in Nigeria for that particular period, you are seen as not being resident in Nigeria. Stay in Nigeria for a period less than 183 days. So if for any reason, whether in Nigerian or otherwise, but you are in Nigeria for a period of less than 183 days, you are seen as not being resident. Whether you are resident or not resident, it's not a total exemption that one may not be subjectable to taxes in Nigeria. So what then would then be the principal place of residence of those who have more than one place of residency? With respect to an individual, there is a place available for domestic use in Nigeria on a relevant day, other than guest room, hotel, rest house, or a place where it temporarily lodge. So what we mean by that is the place that's on for a strict domestic purpose, you usually abode, is said to be your, the state where that is said to be your principal place of residency. And that place that that's available to you must not be a guest house or a guest room, must not be an hotel, must not be a rest house, but it must be either a place that you personally built or a place that you personally rent. So one of the principal places of identifying this, even if you are not living there, wherever your family, your immediate family resides and you are responsible for the cost of that place, is said to be your place of residency. Any question thus far? Any question? Any question? Are you sure you guys are there? I'm not getting any response from anybody. Okay, who will volunteer to reading this for us? Any volunteer? Principal place of residency, who is volunteering? Okay, you have the floor.
In case of individual with no source of income other than pension in Nigeria, the principal place of residence for tax purpose shall be the place or those places in which he usually resides. B, in case of individual with source of earned income other than pension in Nigeria, the principal place of residence or tax purpose shall be that place or those places which on a relevant day is nearest to its usual place of work. C, in case of individual with source of unearned income in Nigeria, the principal place of residence for tax purpose shall be that place or those places which he usually resides.
Okay, who can explain this for us? Who can explain?
Okay, the very first one means that if an individual, it relates to pensioners really, that the principal place of their residence for tax purpose shall be the place that he usually resides. That is for A.
Make that practicable. Can you use yourself as a example,
Okay.
or create an example for us?
Okay, assuming I'm a pensioner now and I reside in Lagos. Then
okay,
the principal place of my residence for tax purpose is Lagos.
Okay, okay. That is well understood. The next one. Take the next one. Can you explain the second one?
Okay, let me try. Okay, the second one says for individual with source of earned income other than pension, that the principal place of residence for tax purpose is usually the place which is a relevant place nearest to his usual place of work. Okay, I would take, for example, assuming I'm working for company X in Lagos, and I reside in Ogudu. Take, for example, for tax purpose, my principal place of residence would be Ogudu.
Okay, let me create a scenario around that.
Okay.
Very many people work in Lagos, have a place of residency in Lagos. also have a place of residence, maybe in Mowe or Abeokuta or Sangota, right? Or Arepo. If you are the person, it means all of those other places I've mentioned, they are not in Lagos State, right? What will be your principal place of residence in that my scenario?
My place of residence in Lagos.
Lagos.
Okay. What if you are working in Ondo States, right?
Yeah.
But
Yeah.
you usually reside in Lagos, and you also have a place of residence in Ogun State. What then will be your principal place of residence?
I work in Ondo State.
Yes, but you reside in Lagos. You have a place of residence in Lagos and Ogun State. What would be your principal place of residence?
Ogun State.
Let me just guess, Ogun State.
What do you say?
Ogun State.
Okay, because that is closer to, yeah, exactly. Go ahead. Yeah, take the next one. Or let's call on another person to explain the third one.
I wouldn't know if you can hear me clearly, so I should try the third one, sir. Can you hear me?
Okay, I think it's better now.
It says in case of individual source of earning income in Nigeria, and once you have
lost your voice again, no?
Can you hear me?
Yes, speak to your mouthpiece, please.
Yes, sir. I said it says that in case of individual with source of unearned income in Nigeria, the principal place of residence for tax purposes shall be that place of those places which he usually resides. And the first thing is, when we talk about unearned income, we're talking about the income in which you don't use your let me say physical effort in any of the income. Like for instance, now let's say dividend, rent, royalty. These are the income that what works for you is your money. For instance, when you invest in a company, so what you get back from that company is dividend. So that's an unearned income. So with regards to the place of residence, so the that is going to be the place in which you actually reside. So for instance, even if I'm investing in a company in Lagos that I'm staying in Ogun State, so it's still going to be Ogun State because that is where I usually reside.
How then do you determine the usual place you reside?
Yeah, it's going to be the state I am residing, which is Ogun State.
No, it will be the place you are on the first day of January of that tax year.
Yes, sir.
Yeah,
yes, sir.
that would be your usual place of residence. Do you understand?
Okay, sir. Yes, sir.
Yeah, thank you very much for your contribution. All right, so income tax, income for personal income tax purpose can be classified into one. Don't forget I said earlier on that PIT is the same thing as payee. So whether you call it PIT or you call it payee, it is calculated the same way. It is the same law that regulates it. It's most definitely collectible by the same tax authority, right? But the only thing that makes it different is whether the contract giving rise to that income is a contract of service or is a contract for service. So earned income are income that arose by reason of your physical efforts or exercise you made in the discharge of those services or activity that give rise to that income. So they are usually in the form of trade, the businesses you do, your professional services, your vocations, your employment and the likes. Those are returns that came out of that is earned income. Then on earned income are those passive income that you actually earn, very much activities that give rise to that income are actually passive to you. That is, you are not actively engaged in activities or events that give rise to that income, right? You could have used your resources to seal your commitment to generating that income, but you are not involved physically to actually earn that income. So some of those passive incomes are dividends. You've invested in the company, the returns you are given as a shareholder there, it's a dividend. You have rental income. You built some houses in the past, and those who reside in that very house, because you have given it out for let, it's a passive income. Royalty, you have certain rights over certain thing, right, or product, and you have sublet this right to be utilized by other people for a consideration. That's a royalty. Earnings from patent rights, earnings from copyright, gifts, all of these are unearned income. So these are things you need to know as far as taxation of personal income tax is concerned. You need to know whether that contract is contract for employment or of employment. And I've said it earlier, contract of employment is not subject to PIT, but is subject to payee, while contract for employment is subject to, PIT. And other types of employment that we have looked at, the Nigerian employment, an employment can still be a Nigerian employment, but still be either contract for or contract of. So you need to know it's still the underlying decision that will determine what form of tax we accrue on each. Any question? Any question before we wrap this up? We have looked at how to calculating that payee before, and I told you earlier that it's the same. So all you need to do is to aggregate all the incomes that qualifies as contract for employment and make the estimates in the same way we have explained it before. Another unique difference then is you have to look at CRA is applicable to everybody by default, but pension is subject to whether you actually subscribe to pension. So if you have somebody under a contract for employment that has not subscribed to pension, such person cannot claim pension as a relief. If you are not making contribution for NHF, you cannot claim it as a relief. If you have not taken an HMO policy on your own cost, then you cannot claim it as a relief. So all of these points are very salient points that you need to know, and you need to revisit the class we earlier had on calculation of pay as you earn. Any question before we wrap it all up? Any question? Do I assume that everybody understand all that we have discussed thus far?
No, sir. I have a question, sir.
Okay.
My question is relating to insurance worker.
Insurance worker, okay.
Yeah. When an insurance worker work in one state, let's say assuming 19 days, he spent 19 days, he moved to another state, worked for 15 days, he moved to another state, worked for 16 days. Which state is his principal place of residence in this regard, where the state that will tax him?
Okay, the position of the law is very clear. Even though for an insurance worker, you are expected to have spent at least 90 days in any state before you are subjectable to taxes. But if in any year that person did not spend 90 days in any state, then the place that he usually resides will be his place of residence that he will be, that he will be liable to paying tax to. And if that person is married, where the family actually resides, where he usually goes to meeting them after having made all his business travels, would be his usual place of residence. Is that clear? Okay, any question again? Okay, so if there is no question, will you just indicate on the chat box that there is none so that we can close the class? I need response from almost everybody so that we can know whether we can actually draw the curtain to the lessons of today. Okay, okay. So I want to wish you a very pleasant remaining part of the weekend. But please, more importantly, take time out to revise all of these things that we've been discussing. And should you have any reason for seeking any area of clarification, please engage the chat box. Engage the WhatsApp group to getting your colleagues' opinion. I wish you all the very best. See you tomorrow for another continuation section on our last audit class. Thank you and enjoy the rest of the night.